Good Friday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 7 KOH. It's a pleasure to be with you. Who's this guy that I'm with?
Yeah.
It's been a long time since you and I have been together, my brother. It has been a long time, Mr. Gaunt. Mr. Gaunt.
It's been virtual, either you or me. It's,
Exactly.
They got to pay up to get both of us.
That's right. Pay the big bucks for that. You better believe that. How are you, my friend?
I'm doing well. Happy that this week is in the books. Happy that we get a little vacation on Monday.
Mm-hmm.
Got in touch with you. What was it, like Thursday? And I was like, oh my gosh, market's closed on Monday.
I know. Neither one of us knew it until happened to, I think one of our assistants told us or something. And then saw that. And then as I told you, it's like, because I was out sick earlier in the week, it's like, today feels like Tuesday. And you said, yeah, but isn't it better that it's Friday in the 3-day week?
Feeling like, exactly.
A lot better than the opposite. Yeah, absolutely. Well, welcome everybody. We hope you've had a great Friday and heading into a nice long weekend for many of you. I hope. Again, as a reminder, the market will be closed on Monday. But in the meantime, we got a lot of business to talk about, and let's get down to it. Jason and I were thinking about this, and there's an interesting feeling, and I may have it a little bit more than you. I don't know.
Mm-hmm.
We've titled today's show "Headline Fatigue." Headline fatigue, how to invest when the news never stops. And, the reason that I think this is such a timely topic, Jason, is we're in one of these needs, I guess we'll call it a news funnel type of situation where every day, day by day, and I'm talking 7 days a week, we see so many things coming out of the Trump administration, even on the weekends, that we've got all these headlines coming our way. And also, of course, we are in the heart of earnings season has just begun. But, we get into these headlines, right? Nonstop headlines coming out of Washington. And it creates, at least I'm feeling that way, this headline fatigue term that I came up with. And I thought it'd be an interesting topic to talk about. And I saw something earlier in the week from someone, and I was trying to find the email. I deleted it and I shouldn't have. But he's a strategist, and he said, think about what we're dealing with right now, right? We're dealing with the Trump administration. I'm not saying this in a negative way, but every day, sometimes hour by hour, there's news coming out. But think about the headlines, Jay, that we're dealing with at this point. Okay, we just took over a country, Venezuela. We now just sold our first batch of oil, and the money is sitting in, what Middle Eastern country? Gollies, I want to say Qatar, and no, it's not Qatar, but it's not in our hands. It's because the U.S. is fearful that creditors of Venezuela are going to come after the money. And it was like, $500 million. It was like the first, chunk of oil, not chunk, of course, but first few hundred barrels or thousands of barrels that they sold. So we just took over a country. We're now threatening to take over another country, meaning Greenland. I don't know if you saw the headline come across today that quite a few people with pretty good knowledge are saying that probably over the weekend we're going to be attacking Iran. Oh, that came out of Israel made that comment, so take it for what it's worth. So we're dealing with the Middle East situation with that side of things. We have the president just kind of pulled the rug out on Kevin Hassett today, who the street really wanted is the next Federal Reserve chairman. We've got Davos happening next week where the president's going to be there, and that's going to be some pretty interesting headlines. He's supposed to be talking about, we don't have the details yet, but something in regards to being able to utilize the 401k for home purchases and so on and so forth. And again, the list just goes on and on and on, and you sit back and you go, which one of these really are going to affect the market? Which ones aren't, right? And that's the headline fatigue side of things right now. And here we are, only the beginning of the year. And to me, it feels like we're halfway through the year already with all the things that we've dealt with just in the first couple of weeks of this year.
You think this is just to downplay the Epstein files? No, I'm just kidding. I'm just joking.
Never.
I gotta make everyone angry.
Yeah, there you go.
You've talked about it before. It's back to the Twitter of old, where you had to have truly just a feed. And I did this back when I was trading a Trump feed on my Twitter at the time. Tweet deck was what it was called before, and you could create custom funnels. And I just had one for Trump, and it would probably outweigh a Discord server for kids playing video games, the amount of stuff that's ripping through it. And Great point. The market hates what it doesn't know. And yes, it's been climbing the wall of worry because it's also been led to believe that in the future you've got lower interest rates and a continually looser economic and business environment and less regulation and all the things that we want to hear. And I think that's why the market is at least looking through a lot of it. The only tough part is, complacency is never your friend. A Bank of America's bull bear indicator right now is at a 9.3 out of 10, as in extremely bullish, which is a contrarian indicator of, right. Typically, you want to sort of shy away from thing. The 10-year interest rate today ripping back through that 420 level, which has been a psychological lid to the upside for a bit. And oil, had a big move down 4%. You go poking at Iran for some reason.
Mm-hmm.
Oil's probably going up and to the right. The market started out strong, small caps up, 8% this year so far, and it's January 19th. So that I'm watching small caps. I think as long as they continue to act as they are, I'm going to continue to be cautiously optimistic.
Absolutely.
But it could be any day that one too many comments gets the market fearful. And that's what I talked about earlier in the week on shows of that the market doesn't like what it doesn't know. So there could be a risk off situation, not necessarily because of an event, but more of fear of multiple events that create a bunch of confusion. And so that's why it makes sense to at least be keeping a close eye on things, tight stops.
Excellent point. My fear is, I'll use your word, the complacency side of things. Something in my, as you like to use the term, my spidey senses are saying, there's too much chaos going on in the world, and we're at the cause of a lot of it. I mean, like I said, Venezuela and most likely Greenland coming up, and so on and so forth. And there's arguments for pluses and minuses of what the president is doing. It's like normally the markets would kind of, use the pun term, freak out a bit when you have one of these headlines. But we have all of these different headlines, and it's just slowly but surely, we've dipped a little bit on the weekly basis, this week and last week. But like you said, we're still solid on a year-to-date basis. You hit around the head. Russell 2000 is up 8%. Dow is up 2.7. S&P is up 1.4. Nasdaq up 1.2. And I think the point we you and I, with our experience, we need to lay out to the audience is you can't get complacent in stuff like this. And you may be saying, okay, on one side, we got a lot of headlines. The market's not being affected by them. So therefore the headlines must be good. So therefore I need to be 100% bullish and fully invested and concentrate my portfolio into nothing but AI stocks and some of the high flyers and things like that. And it's just, Jason, they're shaking his head. No. And that's exactly the point is, you've got to be careful in these headline type of funnels that we find ourselves in when the market's like, hey, everything is just fine. And you look below the surface and you go, is it really? How much can we really tolerate in unknowns at this point?
And all crowding, right? I think this year just so presses the fact of having multiple irons in the fire across US and international and small cap and commodities. Like this is the sweet spot for a diversified portfolio. You're winning all over the place versus getting too concentrated. Like there's so many bets that I think are so crowded. Silver, for example, right? That to me seems like one you can wake up tomorrow and the thing could be down 25%. And it's just such a crowded trade that anything that goes parabolic doesn't tend to stay parabolic, right? So again, earlier in the weeks, it's sort of caveat emptor there. Yes, you could buy it. And yes, do I think longer term it's higher? But near term, those types of moves, you get a lot of crowding in one direction.
We saw that. We saw one day this week, we saw a big pullback in the precious.
Yeah.
So it can. Don't you also think, and you're much more of a currency guy than I am, that this also, to me, besides this headline risk or headline risks that we're facing, this also is a type of a market where there could be something, the cockroach theory. There could be something going on underneath, and it's usually something very sophisticated, such as currency or credit default swaps, or something that is not in the vocabulary of the average investor, but yet on the institutional side, they see something brewing and they can pull the rug out on one of those items as an example. And there goes the house of cards from that standpoint.
Yeah, man, I always watch the yen, right? Japanese yen is one that is always a good tell to see. It's been getting weaker and weaker and weaker. The dollar's down 10% before bouncing earlier. Yeah, overall, it doesn't feel like macro's too freaked out, just given the things that I watch on the interest rate side, both domestically and global in terms of volatility. I'd argue it's probably more that complacency thing of people are, winning everywhere. And sometimes that sets you up for too much confidence and too much risk taking. But yeah, it will be a unknown that cracks this market, that cracks this bull trend.
That's the point.
The tough part with that is you don't know, right? What's
you don't know when and what it specifically is, but typically in this type of environment,
something weird that sort of sets things in motion, right? You mentioned Venezuela. Who knows?
I mean, you look at the chip makers real quick before we go to break. You look at the chip makers just ripping every day. Today, Micron up, another $26 today, 26.12. Their director came out and said he purchased more than 7.8 billion, not million, but billions of dollars of his own stock. Yeah, exactly. I mean, I don't think I've ever seen a C-suite executive purchase something in the billions of dollars. Yeah, exactly. Yeah, well, I hit too many zeros there or something. But yeah, you got the chips just ripping. You got the financials doing well. Goldman had one heck of a week. Gave a little bit back from its highs a couple days ago, but Amex was strong today, helping the Dow out. Yeah, it's just, but again, it's like no one is paying attention to all these headline risks. That's the gist that we'll be discussing throughout the show today. No one's paying really attention to it. And again, maybe they shouldn't be. Maybe there's too much good going on out there where they can go, you know what? It's okay if we're taking over countries and if we're doing this and if we're doing that.
So far outside of Venezuela, it's just rhetoric, right? Yes, Iran has their things going on, but it's not uncommon to see it.
I think Greenland's going to happen.
We haven't taken over Greenland. We haven't,
I think it's going to happen. It's going to happen. I really do. So anyways, all right, we got a lot to talk about. Let's go ahead and take our first break. And wait a minute, from what I heard coming into the show, Jason, our wonderful Kristen Snow, it is her birthday. Is that correct?
Wow.
Kristen, happy birthday.
Happy birthday.
Welcome back to the Jon Sanchez Show on Newstalk 780 KOH. Happy Friday to all of you. And let me tell you how this market finished up for the day. It was it felt like a tired session today, Jason. Really did. Just started off really strong, had a few periods of strength, and then we just kind of faded and just really could not get any traction whatsoever. Finished down 83 on the Dow, just a fraction of a percentage loss. Our close was 49,359. NASDAQ lost 15 and the S&P down 5. On the commodity side of things, perked up just a little bit on oil, 25-cent gain. Almost broke $60 earlier this morning, but finished at $59.34 a barrel, down $28.80 on gold, $4,595.30 an ounce, and a pretty good uptick for the day and the week on yields. 10-year focusing up 7 basis points on the 10-year. As you mentioned, 4.23 was our close there. For the week, 10-year was up 6 basis points. All right, we're talking about headline fatigue, and what we're really going to start breaking down now after Jason goes through some of the movers here in the market. We'll get into what really is headline fatigue and how do you need to be aware of it and what is it as an investor, right? Because we feel that this is something that's going on right now. We'll get into, how professionals such as ourselves kind of filter through some of these headlines. And it's really, becomes a situation where it takes a lot of experience to go, okay, which ones are really important, which ones aren't? Because if you get sucked into, and I'll be honest with you, Jason, I got sucked into it this week. And I think that's probably why my brain wanted to do this topic. Laying there in bed for the last couple of days, just constantly monitoring the markets and everything, which I know I shouldn't be doing. But he's like, you're nuts. Fighting a fever and you're going, wait a minute, what's going on here? But, you start to really get absorbed right into every little headline that comes across. And that is one of the absolute worst things that you can do. So that's going to kind of be what we're going to take you through here. But in the meantime, let's go to some of the movers today, my friend.
Yeah, I mean, you'd mentioned quite a few of them early on, and I'd say GE Vernova was a big one. Yeah. Again, because of most of the movers outside of a $7.8 billion stock buy are Trump headlines, and that's where the fatigue comes in. Where I forget who said it today on TV, but it's just sort of chasing the next thing. GE Vernova was up 6%. President Trump called for a development of more power plants. Nuclear stocks have been on a tear. Oklo, names like that have been up a lot this year. You had a bit of a rebound back in some of the financials names, PNC, Synchrony, American Express. They'd all been under some pressure from the cap on credit card rates, but then you get some decent reports.
There you go, another headline. Yeah, 10% cap. Yeah.
Right. And so, that's those are certainly notable movers as far as the market's concerned. Sector-wise, it was a wild week, but I felt that trend. Real estate did incredibly well today, despite the fact that interest rates were up, which was sort of odd to me. But I think there's people who are trying to bottom fish in that space, expecting that mortgage-backed security purchase could start sooner rather than later, given Trump had made comments about it. Could it be announced, as you mentioned, at Davos more officially as another one of the items? But it's been a year to be everywhere, and that's the exciting part for us, is managing diversified portfolios with international exposure. Emerging markets are up over 6%, small caps are up over 8%. It's just puts a smile on my face when you've got lots of eggs in lots of baskets, and they're all hatching pretty birds.
Let's go back to the credit card situation. That was why we saw some of the dips in the financials earlier in the week. That one will be interesting to see. And I think this goes into the headline risk. It's where Trump just comes out with these new rules, right? I think that's the other thing that makes it fun, challenging, et cetera, is who in the right mind, think about this, who in the right mind would have ever thought that a president, regardless, Republican or Democrat, could come out and go, hey, you know what? 10% cap for 1 year on credit cards. Okay. I guess so. For all you large companies out there, private family offices, the publicly traded companies that have acquired thousands and hundreds of thousands of homes, you can't buy those anymore, right? So
they're picking winners and losers. It's
but how do you have the power to do that? And I know everyone's going,
because you're the president.
But the thing is, no one, Jason. This is the scary, but yet could be very profitable side potentially. No one's challenging him, and no one has the guts to challenge him, right? So when he comes out with these new ideas, good or bad, whether you agree, disagree, whether the market likes it or dislikes it, no one challenges them. If you notice that, what did he tell the semiconductor stocks? Some of the companies today, hey, once again, you know what? You better be spending a bunch of money here, or here comes the tariffs again. So he started getting back on the path of the tariffs for semiconductor companies that are not building factories here. How much do you think? Oh, geez, we got to run the break. How much do you think he is responsible for last year and this year's market gains? 60% responsible, 70%?
I'd say 70, yeah.
Yeah, I mean, that was exactly where I was going to pick.
And the love him or hate him, the regulation compression, the lower interest rate guidance, right? Those are just the things that markets like to hear. Therefore, if you're short, it is hard to be short.
Oh my God, who in the right mind would be short right now?
The chase is on for all things that certainly could be the next tweet or whatever the heck a Truth Social post is called.
Yeah, absolutely. All right, we'll continue discussing headline fatigue. How do we handle this and how do we manage it? Well, let's turn it over to Jack Saban. He's got news. He's got traffic and weather. Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Happy Friday to all of you. Joined, of course, by Jason Gaunt. We finished down 83 on the Dow, lost 15 on the NASDAQ, and a give up of 4 on the S&P 500. All right, our topic this Friday afternoon is the headline fatigue, and again, why so many investors are feeling it right now. And if you are, join the club, right? Professionals, non-professionals, we're all feeling it. We get a lot of things thrown our way. And here's another one, right? We've covered Venezuela a bit and potentially Iran, as many are warning over the weekend. We've talked about Greenland and so on and so forth. But here's another one Jason and I were joking about during the break. So you have Kevin Hassett, which many of you are familiar with, National Economic Council director. Overall, most feel he's done a pretty doggone good job. But, here we have Chairman Powell ready to step aside in May, potentially.
Step aside, yeah.
Yeah. I was trying to be nice, all right? Yeah, there you go. Exactly. Oh, yeah, by the way, we had that headline, over the weekend too, right? Hey, got a lawsuit coming against you, Mr. Chairman. But anyways, Hassett, kind of the front runners are Kevin Hassett and Wersch as far as who's going to take over
Kevin
the Kevin and Kevin show. Mm-hmm. Take over for Powell, right? Yeah, obviously they have to get Senate confirmation. But old Kevin Hassett, I think he really, really wants the job. And Jason and I were saying during the break, I think if you did a poll on the street, I think most institutional investors, et cetera, wanted him more than Wersch. And that's kind of the way things were going. Well, the reason I'm bringing all this up to you is, so today, the president is sitting at his desk and he's got the news cameras there and they're doing all kinds of, talking about this and all of his great accomplishments. Probably talking about receiving the Nobel Prize.
Yeah, did you hear that? I mean, if you get it from someone else, it still counts. Like, can you imagine? Like,
I can't out of it. I saw that. I'm like, really?
it
Really?
is pretty amazing.
But anyways, so Wersh is sitting there Hassan's sitting there in the audience today. This is what caused the market to really dip, and we never really recovered from it. And the president looks over at him and says, "Hey, Kevin, you looked really good on TV today." I think he did a press conference earlier in the day with Bloomberg or somebody. And he goes, "You looked really good on TV," and he goes, "Matter of fact, you look really good in your current position. I think I'm going to keep you there." And then the market just goes clunk and falls on the news. So the takeaway, of course, was, well, looks like Hassett is out for taking over the head of the Fed, and Wersch is. I mean, I'm not hearing any other names unless there's some black swans out there. I'm not hearing any other names really at the top of the list for that. So now I think we're going to see the street start to, and knowing Trump, hey, maybe that was just a divergent, man, right? Maybe it's playing a little poker face or something and saying,
Probably.
hey, yeah, we're gonna tell the street we don't want Hassett, but maybe I really do. Maybe I will,
Right.
nominate.
Keep everyone on their feet, art of the game, or art of the deal.
Art of the deal. Yeah. But yeah, so back to something we discussed before we went to break. How much do you think the president's responsible for this economic boom? And I was saying this on the show on yesterday with the guys. And obviously, I share the same opinion. Very, very bullish on this year for a number of different factors. Rates coming down, and just on and on and on. A whole nother show on that one. But I think we have to be able to decipher between some of these good headlines and some of these bad ones. So let's do a little game, my friend. Let's do a little game. All right, what goes through your mind as a 30+ year trader when a Trump, and I'm gonna pick on Trump, when a Trump headline comes your way to make a portfolio decision?
15 years ago, probably much more reactionary than now, where I verify first. So back in the day, you're probably trading more just because of the way that we traded reactionary around positions, and again, more just detail on me back then. I was trading, to have 30 or 40 individual stock orders in front of me that I was trading across financials or tech or whatever. So it mattered more around any day, right? So I'm trading around a day versus now managing diversified portfolios, and we're not making large sea changes around one comment on one day, but I could have had an order back then of a PM that wanted to sell a stock that day. So yes, I was very much concerned on every single move, every single tick. So the more mature me now doesn't have to trade single stock orders in mass during the day. So I'd say it's a bit different.
Life's so sweet.
Yes, you're going to be in a better spot, not reacting to the comments, for sure.
And you're going to live longer too.
That's a fact.
Your heart's going to live longer.
Right, yes.
Oh goodness. When if you threw that question at me, which I tossed it up to you, but you didn't, so I'll answer it myself. I think what goes through my mind is same thing. Obviously, the older we get, the more mature and become much more rational. And I kind of sit there and go, okay, is this a political risk or is this an economic / stock market risk, right? And it is tough. There is no doubt about it, because the way our brains work as portfolio managers is you sit there and go, okay, yes, it's a political risk, but could that political risk roll over into an economic risk, right? Let's say, let's just pick Venezuela for an example, right? So that was a political. It started with blowing up all the drug boats and everything that just happened there and everything else, and then so that's more of a political risk. And then all of a sudden you go, oh, what's the real reason behind this? And I think you and I discussed this a few times. What's the real reason behind this? And of course, it was oil. And I think we brought that up. He wants to get his hands on oil, and oil is liquid gold, right? It's that way. And so a political risk can definitely become an economic, but many times a political risk just stays that. And those aren't the things you want to trade, especially with this president. You will blow yourself up, in our opinion, because this market will move so fast. And all it takes is, let's do the tariff situation, right? Let's go back to April of last year, right? The whole world was coming to an end on these things called tariffs that we really didn't know. And now we look back on those and go, okay, well, they were painful and all that, but didn't really end up, none of them really, hardly any of them, I should say, didn't really come of fruition to the extent that he warned or threatened, so on and so forth, when he stood there, at the White House with that big board saying, here's the country and here's the tariff, here's the country, here's the tariff. And so, you have to, again, I think now you have to kind of sit back and just go, okay, political or economic? If it's political, could it have an economic impact? And if not, just brush it aside and wait and see what happens. Right? I mean, there's really nothing else that you can do, but you can't trade every headline. You just absolutely go nuts and blow yourself up.
I mean, ironically, you mentioned the tariffs, another headline that the market was very much keen to and reacting to, and we're kicking it to another week. Last week was, when are they going to announce whether the court approves or shoots down Trump's tariffs? Right. So that's another headline risk to throw into all of the many that you mentioned earlier of the funnel that is being shot at us. And once we get that answer, I think it's going to clear up or make more murky some of these other headlines. Certainly the Supreme Court ruling in tariffs, and how's that going to lead into many of the other items. We'll make next week exciting, because who knows? Maybe they'll announce next week.
Yep. Who knows? No one has an exact date. All right, when we come back, we're going to wrap it up and say, okay, now that we know we can decipher between political, or try to decipher between political and economic headlines to make our investment decisions. Now, the last thing is, where do you get your news from? That's another big impact when it comes into your investing decisions. Where are you picking it up from? So we'll wrap things up with that. Speaking of wrapping it up, let's do it with the birthday girl, Kristen Snow, right now Traffic Center. One more time, my dear. Happy birthday to you. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH. Happy Friday once again, and final time to all of you. Hope you have a great 3-day weekend. All right, we've been talking about headline risk, right? Headline fatigue, I should say. And so, we've covered, why so many people, both professional, non-professional, are feeling headline fatigue. It's only human nature, again, with all the things being thrown at us at this point. Washington noise versus market reality. Talked about, again, how professionals, we were talking about how do we decipher what we need to trade off of, again, political risk versus actual economic risk, or data, I should say, not risk. But let's kind of wrap things up, Jason, with the sources, right? I think this is the other fatiguing side of being an investor these days, is you have obviously almost an unlimited number of sources, news sources coming your way, and trying to figure out which ones do you believe, which ones do you don't.
Yeah, I mean, we use pretty benign sources, like they're just news. They're not real news or fake news, or
Yes,
I think that's the tough part too, is that people are living in their own echo chamber a lot of time with their news. So what may be benign sounds more angsty, and then on the flip side, what maybe should be something you should be fearful of, they tend to pitch it more self-effacing, right? So it's I like the more benign news sources. They don't have to be Fox or CNN. CNBC always tends to be good from one-line information. Yes, they have a bit of a bias at times. I like Bloomberg News. Again, political bias aside, they do a good job of just giving you the data. But ultimately, I always say stocks don't lie. Yes, they do a quick reaction. Unless you're a day trader and you're truly, that's what your job is, you shouldn't be reacting to one-liners that don't really carry under their weight other than an idle threat. And much like the boy who cried wolf, right? You have to numb yourself to all of these comments all the time, from Trump or otherwise, and until you see some real follow through and say, okay, this is something I need to make a real change in my portfolio risk, either positive or negative, and then make that decision, versus you're going to just chop yourself up, getting in and getting out and getting in and getting out around everything that sounds scary.
I'll just disclose one service that Jason and I use, and gosh, I think I've probably used this thing for 20 years. It's called briefing.com, and I introduced you to it. And it's not an expensive service, like $40-$50 a month or something. But the reason I'm bringing up Briefing is it takes the news, it's a culmination of news from pretty much everywhere, right? All Dow Jones Newswires and CNBC and Bloomberg, and you name it, it seems to be, they get all the news. And that's a really good way to do it also, where you're not getting one biased opinion, to your point, but choose a news source that's getting it from a lot of different places, and then you get to make the decision, based upon what you're seeing. The other thing that's nice about it, it'll give you different summaries. It'll tell you, it's more of an institutional, but I should kind of mention, it's not fancy by any means, no real fluff or anything. It's just, kind of black and white, here it comes. But what we use it a lot for also is we get scrolling news. So if you'll notice, sometimes during the show or during the stock updates, et cetera, we'll get breaking news well before CNBC does or something, because again, it's getting fed that news from so many different sources. And by the time, you take a company like a CNBC, which, we absolutely love, but by the time an editor gets a news headline, they have to verify it, right? They just can't go, oh, hey, this is happening or that's happening, where something like like a briefing.com. It's more, here's the news, that's up to the reader to determine if the news is accurate or not, right? So there's pluses and minuses to something like that. But that tends to be, the longer I'm in this business, that tends to be like one of my favorite ways to get the news is give it to me, let me decipher what I want to believe, what I don't want to believe, so on and so forth, and make the decisions based upon that.
Yeah, Briefing, Street Account. I like Marketeer. I like Equity Clock. Those are a couple chart-based things I use all the time. Bunch of good podcast. I mean, heck, we could have a whole show on people we like and data we like and things we listen to. Yeah, it's lots out there.
Yeah, no, there absolutely is. Never lacking the data, that's for sure. All right, music is playing. The week is over. We have a 3-day weekend ahead of us here. I wish you a very wonderful weekend, my friend.
You too.
Thank you.
Feel better?
Gonna definitely use this weekend to grab a few naps and
recharge
the battery, get rid of this whatever's still lingering in my body, and come back strong on Tuesday. All right, everybody. God bless you. Have a great weekend. Thanks so much for joining us. We'll be back with you on Tuesday on the Jon Sanchez Show, News Talk 7.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.